for more on the fate of the spending and infrastructure bills, which have caused some big moves already in sectors like solar. I'm joined by Libby Cantrill. She's head of public policy at PIMCO. And Dan Clifton is head of policy research at Strategas Securities. Great to have you both here. Libby, I'll start with you, big picture. What do you expect to happen for the next couple of days here?
Yeah, I mean, well, look, we're now in the 7th month of the negotiation of the Build Back Better agenda. I don't think we are quite at the final word here. I think we're more kind of in the 7th or 8th inning, but we do have a good sense for what the final legislation probably looks like. I think there will, be likely some tweaks. The SALT deduction, for instance, that's a big priority for a lot of Democrats in the House, for instance, that will likely be revised. So I think that we are very close to the finish line, but not quite there yet. So the next couple of days, I think we should expect some more twists and turns. We may get a vote on this bipartisan infrastructure deal. Clearly, that's Speaker Pelosi's intention. But if we don't, if it's not today, if it's not this week, I don't think we should lose the forest for the trees here. The bottom line is that both of these bills will very likely pass by the end of the year. We've been saying this for a while to our clients. Failure is just not an option. So I think bottom line, expect more twists and turns over the next couple of days. But by the end of the year, both of these pieces of legislation are very likely to be signed into law.
Dan, I sort of joked about this off the top, but it's hard bill to even discuss because of the fluidity in terms of what's in it. So I think based on listening to the president earlier, we can say it's a preschool funding bill. It's a child care funding bill. It's an elder care in some ways funding bill. I mean, it's a lot of things. And, there's climate in there. There's incentive, and we've seen the solar stocks are on the move big time. I guess maybe I'll just ask you the question from investors' point of view. What are the investing implications here?
Yeah, that's the right way to do it. And Kelly, we put it into broad groups of categories. So we have more money for shoring up the social safety net. We have a massive investment in clean energy. This would be the biggest standalone energy bill I've ever worked on if it was just an energy bill. And we have a very significant healthcare portion to this bill as well. And so what you see is more ACA subsidies for the Affordable Care Act, more Medicaid expansion. We see no drug pricing changes in this bill. That may change overall, but you're seeing massive investments on the spending side. And then you got to think about the tax side, right? No corporate tax increase, some higher taxes on multinationals, which came in a little bit less than expected. So domestic companies are probably going to benefit more than U.S. multinationals based on that. And then when you look at, capital gains, you're going to get a capital gains tax increase for anybody over 10 million. But below that, you're starting to see the tax expectations come down somewhat. And the key here, Kelly, is that it was like whiplash last week. Are we doing a wealth tax, unrealized capital gains tax? It just kept going back and forth. Those range of outcomes are now shrinking. There will be final changes on the margin. Everybody's at the table. This may even fail one time before it succeeds. But I think this morning, investors now have a good range of what those potential outcomes are, and it makes it easier to identify who the winners and losers are going to be in this bill.
Shepard Smith here. Thanks for watching CNBC on YouTube.